Hey guys, it's Julie. It's Saturday, October 7th. I'm going to go through the market of what happened Friday for the non-farm payroll report. Got a big beat. So when you get a beat in the market, you're going to have an extended move usually because it was unexpected. Nobody called that. None of the gurus or people in the know or PhDs or whatever, nobody got it. And in fact, the CTA positioning and the higher frequency traders were all short, extremely short. I mean, the CTAs were the most short in the model's history, according to the market ear. They just released that this morning. And the higher frequency trading desks have also increased their short positions. So the notional US exposure, short exposure, is in the 80th percentile since 2018. So, do we have some downside to go? Is this a change of regime? You know, it's hard to say at this point. We never got past the weekly ones. So let's not get excited, right? We know with JATS PT that the dealer puts the risk on the ones, right? So here's the weekly ones. They never broke the NASDAQ. Okay. The NQ stayed inside the weekly ones. The dealer did not break its spreads. They broke the spreads last week. They did not break them this week. Okay. Um, so let's look. Here the monthly's up here at 15,317. So if we break above 151, we're going probably to that monthly one. There is a weekly two, and so you have to be careful in a daily two, weekly two, daily two. So we got to be careful with this. We're above well, excuse me, that's a tail. I'm sorry, we're already above the daily three. So we'll get a new daily open Sunday, Monday. Also, it's Columbus Day, so you know I'm not expecting a huge day, but you never know. Trade what comes. But we never broke out of the ones, right? The weekly ones. So it's not anything to get excited about. It's not like we broke above the ones. If we had broken the risk and they started taking off, then I would have said something. And ES never even got to its upper one. I was like tweeting saying there's 10 more points, right? And we never got there because um, the S&P 500 spot index. So we'll look at that in just a second. Here we got down to the weekly threes, and they bid it up um, on the weekly threes. Here's that S&P 500, and you can see that it was a fantastic move. Broke the daily threes, both of them, and went to the first tail target. And so just, the measured move was just right there. And how I measure these is I go from the mean to the three and then go out one time. So this is from mean to three and then measure it out one time, and that's exactly right there. And that's where the market went. And it like put the brakes on. That's all the dealer would give us. And I was like, but we've got 10 more points. I know that, and that's where their risk was, obviously, because they wouldn't let us touch it. I'm learning all these things. So when you can't get close enough to touch it, and it's sitting right there, that definitely his risk was there, the dealer. So here's the VIX, and you can see the move was fantastic. We rallied up off of that non-farm payroll, the volatility, to the daily three. And then they turned around and took it all the way back down to the daily three. So it was a 3 to 3 coast to coast in the volatility. So those vol crushers came in significantly. So despite the CTA heavy short positioning, 40 billion short on the SPX, the most significant short in the model's history, the dealer crushed the vol. Don't fight the dealer, right? Dealer's showing who's boss. It's the dealer. Always is, always has been, always will be. Here's a 21, 23, 30, 37 day model. I use this one because of the way that the CBOE calculates the VIX. And you can see that we're still long vol because we're above the 21 and 23 day ones. That's the white and pink line right here. So 1670 really is my low vol target. If it gets back inside 1670 and starts exploring lower, definitely think Santa Claus, right? Think that low drift higher. And, you know, supposedly we have, supportive flows this period, but we've got CPI, PPI, and the Fed minutes. So there's no way in hell that's going to go below 1670, in my opinion. But, it has snowed in July and hell before many times in the markets. Trade what we see, not our bias. That's one thing that I'm learning, and I'm sure those CTAs know how to hedge their shorts, so don't be feeling too sorry for them. I want to show you one more chart before I let you go for your weekend, and this is how to trade this intraday. So using the JATS PT oscillator to measure the volatility, um, I put my tight super trend on here, and I put it tight because A, it was a long vol event and a huge beat on the report. So I knew that once the direction got going, it was going to be, a takeoff event. Well, the CTAs and the higher frequency traders, they were all over this, right? They slammed it down on that report. But it took an hour for the market to just consolidate down here, and it rolled over on them, and then it took off. So always trade what is in front of you, not what your bias is. So I made like $3,600 on this leg down, and it coughed it all back up when it turned around. And I'm sitting there looking at my P&L going, holy crap, I just lost $3,600, right? Because I was fighting it. I was trying to position more, and it came back and took it all away. And I think that's what the dealer's trying to do, for those who are less experienced like me. Um, don't, do that. Um, and I learn, try to learn. So use the JATS indicator. Um, Here you can see that it's 64.25. This is the 8:30 to 8:45 time frame, so that's my 15-minute opening range. And so because it was a long vol event, you want to try to reach that 64.25 points. And I started, you start out on the bar open, um, but you can shift your risk to the bar low if you would like, or you can just leave it on the open and wait for the next bar in case it doesn't fill it. Because, if you don't get stopped out, you trail it up off of each bar open. So you trail this amount off of the open, and you can see that it never got stopped out all the way up. It never stopped out the entire way up. So you trail this, and you stayed in the trade all the way up. Now, when the market shifted and the volatility went down, you don't want to use that 64 points as a target because your vol has shifted. This meant that we were in the long vol nirvana. I go back to the PT1 because it's short slope, right? Decelerating fast. That VIX was coming down big time. So that's when your bars get real tiny. And I don't know if you can see this, but the 23 points is what they were trading. You see that? You see that? You see that? You see that? So each bar you would have gotten 23 points, even though they're little bitty. You see that? You see that? You see that? So use your and they did not stop out. So even though 23 versus 64, you put this on the open and it doesn't stop you out. You can trail this up, the PT1, when the bars start getting real tiny going up. And then you got some stop outs up here. So use the JATS oscillator and your knowledge of the slope and where you are on this threshold. So I like using the 15-minute range because I use it as a benchmark. I know that if the threshold is continuing to rise, that's when the nirvana is. That's your long vol, and especially when you get above 50 on this 15-minute. I mean, above 50 is like this really good sweet spot, 50 to 68 on the 15-minute. So this 50 to 68 was just like heaven if you were, looking, to try to maximize some trades. But even going above, 20 all the way up, you know, 20 to 70, I mean, that was just perfect, right? And then when it flipped over, it's like taking your foot off the gas. It doesn't mean that you're going to not stop going. It just means that you're not going like you were before. You're not floor pedal to the metal to the floorboard. You're coasting. And when you coast, you go to those smaller ranges. So we can't possibly, unless we're absolutely perfect, and we're not, even though we try to be, um, able to capture, the total 100% of it, unless you just like entered here and closed, at the end of the day, then you probably would have gotten, a good chunk of it that way too. So there's many ways to do this. Um, so, just having a game plan in mind. Are you trying to get 50 points out of that 64? Just because it's 64 points doesn't mean you're going to go for all of it. You might only want to go for 46. That's your PT2. That's your 34, 68, 95. That's your 68%. That's a good target to try to hit. You would have hit every single one of those 46s. So maybe you want to go 23, 46, 64. You know what I'm saying? Have three orders. Something like that. You can mix it up however you would like to do it with your risk. But keep in mind that this template that I will give you Wednesday, well, I can't give you the template. I can help you with the Blackbird part of it, but this is my proprietary indicator up here. It's my version of the super trend. Um, but you don't. Most of the customers don't have that. So if you have a super trend indicator, play with it. Try to adjust your settings. I like to bring it in close for a big trend day. Um, Normally, you would not use it this close. Normally, you would spread it out more because the range is not going to move more and it's more flat range where you're going up and down. Um, and you're not, sitting for an end of the day close. But this was fantastic for an end of the day close. And I will go over this with you on Wednesday in training and try to help you figure it out if you would like help. If you would also like, if you don't have these templates, this is the weekly, monthly, daily. I can give you this template. Make sure you have it. It's wonderful. It's on a 30-minute bar. And you can see, how the market responds to these levels. Um, you know, if it's inside the 68%, you're just inside the normal range. When you break the one, then you have that big push, one, two, three, and then back in. One, two, three. Sometimes it'll just go flat and go sideways on the level. But here we couldn't get down to the weekly one because the daily three was sitting right there. And so yeah, what's going to happen next week? We don't know. We're right in the middle of these ranges. We're right in the middle of the weekly and monthly, and we're going to be opening in the middle of the daily. So waiting for CPI, PPI, and Fed minutes. You know, we might get a pause day on Monday. I don't know, but I am not expecting them to break that monthly one. That's for damn sure. 15,317. All right, guys. Y'all have a great rest of your weekend, and we will talk at you soon. Oh, pardon me. Let me just, before I get your attention, the Earn to Trade has a great, continuing um, offer. They are now giving you the 70% discount on the TCP 25. So you can get your trader career path starting at 25 and then follow it all the way up. You can come over to the site, um, use the coupon code for JATS, and get an offer from them, follow the plan, and try to build your capital in a manner that will help you reach your goal and get a funded account. So that's a great offer. 70% off the Trader Career Path through the end of the month. So please take advantage of that. I'll show you my performance for Friday. Um, like I said, I was up $3,900 and then I coughed it all back. I was actually up 4,000. Well, no, I lost 4,000. I was up 3,900 and then I lost 4,000 on that short. So I, admit my mistake. I was trying to hit the shorts and I was doing a little bit of doubling down, trying to, dig out of a hole, and you can't do that. So I ended up, you know, flat when it turned around, but once I recognized that we were going the other way, I flew it up. I got past the 3,200 and realized I'm only supposed to make 3,300 a day for this gauntlet that I'm in. So I had to dial it back and drop some trades. Had to put some money back on the table to get myself back in position. But um, everything is great. Yeah, it was up. I was up like 6,800, and I had to put money back on the table. Um, so, and the reason they do that is they want you to not get all your money in one session. You have a rule that's called the consistency rule, maintain consistency, and that's why I had to dump some of the profits that I had made. So they don't want you to go over 30% on any one given day. So once I get the funded account, that rule is gone. You don't have to worry about that. They just want you to trade 15 days, get your funded account, and then you can build your account up and get rid of that. This will get dropped. They want you to make as much money as possible. So when these days come back and we have our funded account, we don't, that's what I'm trying to say. We'll hold on to that 6,800 and keep going. You know what I'm saying? We'll get it up there all the way. I had to stop trading quite early, to tell you the truth. So I was like here gnawing my arm off for this one account, this one uh, gauntlet that I'm in. So too bad. But that's okay. There'll be other beats and misses. They work the same way on the misses. So whenever you get an opportunity, when you see a huge disparity in what the economic calendar was projecting to what the actual number was, that's your opportunity to come in and attack that volatility. Grab it while you can, because they'll flatten it out. And that's another thing. We might be hitting some flat vol, even if we stay positive. So that slow Santa rally might be just a slow ride drift. It might be nothing to get too excited about. So grab the ball when you can. It is fleeting. All right. Talk to you soon.